hidden goodwill?
Yes, sir. We have done 2 questions.
Okay. So can you tell me how to calculate hidden goodwill? If you have studied, then please tell me, and then we will move on to the next topic. Anyone?
Sir, total capital of the firm minus combined adjusted capital of all partners.
Okay, good. So first, we have to calculate the total capital of firm by multiplying new partners' capital with reciprocal of his share. Reciprocal of his share. That is, if new partner is getting 1/5 share and he is bringing 1 lakh as his capital, then the total capital of firm will be 1 lakh into 5 by 1. So the total capital of firm will be 5 lakh. Yes?
Yes.
Yes, sir.
And then we have to calculate adjusted capital of partners. And how to calculate adjusted capital? So we have to adjust all the related items with capital, like general reserves, the revaluation profit or loss, whatever the adjustment is given in the question. So we have to adjust all those items in capital account, and then we calculate adjusted capital. And after calculation of adjusted capital, we calculate total of all the partners' adjusted capital, and then we deduct the capital, adjusted capital from total capital of firm. So that is correct answer given by you. So this is our hidden goodwill. Do you have any doubt in hidden goodwill concept? Do you have some question to ask?
No, sir. No doubt.
Okay. So can you move on to revaluation? Actually, revaluation is not completed yet. Yes.
Sir, we have done a revaluation account before, but is there revaluation in this topic as well? We haven't done.
Okay. Actually, revaluation is not so different with previous one, like change in profit sharing ratio. So you have done revaluation in that chapter, but there is some changes in revaluation. So we will understand. Okay.
Okay, sir.
So can you tell me that what is a revaluation? Because I think you studied before. So what is a revaluation?
Sir, the incomes and gains will be on the credit side, and the losses will be on the debit side.
Okay. Actually, why we need a revaluation? Why we do the revaluation at the time of reconstitution?
Sir, I think to distribute the profits properly. I'm not sure.
Okay. Actually, with the time changing, assets and liabilities value changes with time. You can see that when you purchase let's say a building in 50 lakh in 2018. Now, can you tell me that the value of this building will change or remain same?
Sir, it will change.
Sir, it will change.
Good, good. And most probably it will increase. Sometime it decrease, but
So sometimes it may increase or sometimes it may decrease.
yes, sometime it may increase or sometime it may decrease, but maximum time it will generally increase because building land has higher life expectancy.
Okay.
So that's why building and land value generally increases. Okay. So now if the value of land and building or other assets changes, then it will result in profit or loss. And if there is some profit or loss due to change in value of assets and liabilities, then we have to distribute that profit or loss between old partners because the revaluation profit or loss is old profit. It is related to past. That's why it is also called past profit. And it is distributed between old partners because new partner is not related to past. He is coming right now and he will share the future profit of business. So he has no right in past profit. Yes or no? Yes or no?
Sir, could you repeat the question?
So new partner has no right in past profit. Yes or no?
No, sir, they don't have the right.
Actually, it's not a question, it's a statement. Okay. So new partner does not have any right because he is entering in partnership right now and he will share the future profits of business. So revaluation profit, when we talk about revaluation profit or loss, revaluation profit or loss, it is related to past. Because if we say that in 2022, value of machine is 70 lakh, then this increase from 50 lakh to 70 lakh is between 2018 and 2022. Yes or
22.
no?
Yes, sir.
So
It
that's why it
increased.
is past profit. It is before 2022 that it is increased. So revaluation profit or loss is past profit. That's why it is distributed in old ratio between old partners. But there is a but that if question asks you to not distribute that profit or loss, then you can't distribute it in old partners in old ratio. And why question will tell you that? Sometimes question says that you have to show the assets and liability at their old value, that is original value. Then you cannot change the value of assets and liabilities. And sometimes question says that you can change the value of assets and liabilities. Then you can show the assets and liabilities at a revised value, that is after revaluation. Okay, so there is two cases. There is two cases of revaluation. First is assets and liabilities is to be shown at revised value. and the other one is at old value, that is original value. Wait a minute. Okay, so this is our first case, that is assets and liabilities to be shown at revised value, and it is second case that assets and liabilities is to be shown at old value. Okay, so what we have to do, we have to pass journal entry for change in value of assets and liabilities. Then we prepare revaluation account and we distribute the profit or loss between old partners in old ratio in case one. If question asks us to show the assets and liability at revised value, then we have to distribute the profit and loss. There is no issue in that because we have done this in previous chapter, that is change in profit sharing ratio. But if question says that we have to show the assets and liabilities at their old value, original value, then what we have to do? So first we revise the journal entry first. Okay. So first talk about journal entry. Actually, I know that you understand the journal entry, but we need to revise this. Okay. Can you tell me the first journal entry, that is increase in value of assets? What will be the journal entry? Increase in value of assets. Anyone?
Sir, asset account debit revaluation credit.
And why asset account is on the debit side and revaluation is on the credit side?
So the increased value goes to the revaluation, so it can be distributed among the partners.
Actually, if there is any increase in value of assets, it is our profit. And revaluation account is a nominal account. As you know, revaluation account is a nominal account. Okay.
Okay. Sir.
And what is the rule of nominal account? Rule of debit credit?
Sir, increase in value of asset debit and decrease in.
Okay, it's actually a rule as per
That
new
general.
concept. I'm talking about old concept, that is real account, personal account, and nominal account. So what is the rules of debit credit for nominal account? Okay, no problem. Actually, nominal, yes,
Income and gain.
yes, good. Debit all expenses and losses, credit all income and gains. Okay, so revaluation account is nominal account and it is our profit if increase in value of assets. If there is increase in value of assets, then it is our profit. That's why revaluation account is on the credit side. So we will write the entry assets account debit to revaluation account. Is there any doubt in this?
No, sir.
Now, decrease in value of assets. So entry will be reversed, revaluation account debit to assets. Okay. Now, if question asks you about unrecorded assets, assets which is not recorded in the books, but it exists, then what will be the journal entry? Unrecorded assets.
So same as increase in value of asset account debit to revaluation.
Yes, very good. So for unrecorded assets, we have to pass the same entry. This. So assets account debit to revaluation account. Now, if we talk about liabilities and there is increase in liabilities, increase in liabilities or value of liabilities, then it is our loss. If our liability increases, it is our loss. That's why revaluation account is on the debit side. Revaluation account debit to liabilities account. And after this, it's decreasing liabilities. So the entry will be just opposite. Liabilities account debit to revaluation. Okay. Now we have to distribute the profit or loss on revaluation between partners. Yes. So profit or loss on revaluation will be distributed between partners in their old ratio. Whatever, if profit is here, profit on revaluation, then it will be distributed between partners and increase the capital of partner. That's why partner's capital account will be credited. So the revaluation account debit to partner's capital account. And in case of loss, we have to pass the opposite entry, that is partner's capital account debit to the revaluation. So this is our journal entry part. If you have any confusion, any doubt in journal entry, you can ask questions.
No doubt, sir.
Anyone?
Sir, increase in liability revaluation account to liabilities account.
Yes.
How,
Actually, if there is increase in liabilities, means let's say if you have to pay someone rupees 5,000 and now you have to pay rupees 7,000. So it is profit or loss for you.
sir, can you repeat the question?
In past, you have to pay someone rupees 5,000 and now without any transaction, you have to pay him 7,000. So it is profit or loss for you.
Sir, definitely it's a loss.
It's loss. Very good. So in case of loss, revaluation account is debited. So that's why revaluation account debit to liabilities account, because if liability increase, then it is credited.
Okay.
Okay. Any other doubt?
And sir, profit on revaluation.
Profit on revaluation. Okay. So we are distributing the profit between partners. Okay. So from revaluation account, we are transferring the profit to partners capital account. As you have studied about transfer, so when there is balance in any account, then we have to transfer the balance from nominal account to any other account, and here it is partners capital account. So if we distribute the profit between partners, partners capital will increase, yes or no? If we distribute the profit between partners, then partners capital will increase or decrease?
Sir, it will increase.
It will increase. And can you tell me, if there is increase in capital, then capital account will be debited or credited?
Sir, it will be credited.
Credited. Yes, that's why in profit on revaluation, partners capital account is credited, and we are transferring the balance of revaluation account to partners capital. That's why revaluation account is debited. It is not loss. Actually, we are transferring the balance from revaluation account. That's why revaluation account is debited here. Is that clear?
Yes.
Good. Now, we talk about revaluation account. So we all know that format of revaluation account. I'm not writing the whole format. I'm just giving you a brief of revaluation account format. Okay. So it is our revaluation account. So revaluation account is nominal account. So if there is any loss, that loss will be debited. And if there is any profit, then profit will be
It will
credited.
be credited.
Yes. So
Sir,
if
credit
there is,
all incomes and profits and debit all losses and expenses.
yes, yes, very good. So on the debit side, it will be 2, decrease in assets. But you don't have to write decrease in assets. You have to write only the name of that assets. Okay, so let me do this. You have to write only 2 assets.
Sir, do we have to note down this or explain?
Yes, if you want to note down, we can.
Okay. Sir.
Actually, it is also given in your book. But okay, so if you want to note down, let me prepare the format. Okay, so now you can write particular amount, particular amount is credit and it is debit. So if there is any decrease in assets, it will be written here to assets account. And you have to write the change in value in the amount for decrease. Okay. And if there is any increase in assets, then you have to write that assets name on the credit side by assets account, and increase in value here. If there is any increase in liabilities, then the increase will be written here. And if there is any decrease in liability, then that liability will be written on the credit side. So decrease in liability. There may be some unrecorded assets also. So unrecorded assets on the credit side, because it is our profit. It is like when you find some money in your old book. It is like that. So unrecorded assets. You don't know about that assets, but it exists. So that's why it is profit for us. We will write here. And if there is unrecorded liability, then it will be unrecorded liabilities. Okay, so this is our revaluation. Now we have to total the both side, and whichever is higher will be written in total side. And the balance will be transferred to partner's capital account. If lost, then it will be on the credit side, partner's capital account. It will be balance. And if there is any profit, then it will be transferred to the credit side of partner's capital. Balance. Okay. Now tell me that if there is any doubt in this format.
The assets by asset account on the credit side you wrote increase, and by the debit side you wrote decrease.
Yes, yes. Actually, I told you about a revaluation account, that is a nominal account. So rule is debit all expenses and losses. And credit all income and gains. So you can see if there is any decrease in value of assets, it will be loss for us. That's why it is debit. And if there is any increase in assets, then it will be gain for
Profit.
us. Yes, profit for us, and it is credited. Is that clear?
And if it is increase in liability, it is a loss for us.
Yes, increase in liabilities is also loss for us, and decrease in
It is
liabilities is
it's a
profit. Unrecorded liabilities is also loss for us, and unrecorded assets is profit for us. Okay, so now we calculated the profit or loss on revaluation. Then we have to transfer the profit or loss between, you have to distribute the profit or loss between partners in their old profit sharing ratio. So if we have to distribute here, it will be older ratio. So this is the concept of a revaluation account. Okay, so Now we have to solve a question for revaluation. As actually, Imran sir did solve the question in previous classes. Yes.
Yes, sir.
And from which book? Can you tell me?
So T.S. Garewal, I think.
Okay. So, okay, wait. You can see the question.
Yes, sir.
Yes, sir.
Good. So read it. A and B are first read yourself, and then we will start the question. I'm also reading. Okay. So let me read and you just listen. A and B are in partnership, sharing profit and losses in the ratio of 3:2. So their old profit sharing ratio is given. On 1st April 2016, they admitted C into partnership. He paid 50,000 as his capital, but no amount was brought towards goodwill. Can you tell me the accounting treatment in this case? If new partner not brought his goodwill, anyone?
Sir, we'll apply the formula.
And what will be the formula?
Sir, total capital of the firm minus combined adjusted capital of all partners.
Actually, goodwill is given in question. You can see that, but no amount was brought towards goodwill, which was valued at 40,000 for the firm. So it is given in question. It is not hidden. Okay, there is a different accounting treatment for this. I will explain it to you. He acquired 1/5 share in the profits equally from both partners. So he is getting his share from both the partners equally. And it was also decided that land and building be written off by 20,000, stock be written down by 3,200, a provision of 1,000 be created for doubtful debts, and an amount of 1,200 included in sundry creditors be written back as it is no longer payable. So there are 4 transactions related to revaluation account. So we are doing revaluation accounts first, and then I will explain the goodwill part, because we just need to focus on revaluation here. So what will be the journal entry? You want to write this format Yes. Is you already copied this format?
Yes, sir.
So I can change it.
Okay, sir.
Okay. So first item is, you can see, land and building be written off by 20,000. So we have to decrease the value of land and building by 20,000. So it is loss for us. That's why land and building will be written on the debit side to land and building. It is 20,000. Is there any problem?
No, sir.
Stock be written down by 3,200. So can anyone tell me that where the stock will go, debit or credit? Yes, debit. So to a stock, it is 3,200. After that, there is a provision of rupees 1,000 be created for doubtful debts. So provision is created on debtors, and if there is no provision and we have to create 1,000 provision for doubtful debts, then it is loss for us because we have doubt that debtors will not pay rupees 1,000. That's why it is a loss for us. So to provision for doubtful debts, 1,000. And the last item is an amount of 1,200 included in sundry creditors be written back as it is no longer payable. So now we don't need to pay the 1,200 to creditors. So this is profit by creditors account, 1,200. So total will be now 24,200 and 24,200. We have to distribute the profit between partners by partners capital account, and it will be 23,000. We have to distribute it between A and B. So A and B in their old ratio, that is 3:2. So if we distribute 23,000 into 3 by 5 and 23,000 into 2 by 5, so it is B and it is A. Amount will be okay. So the amount will be 30 So 5, 4, 3, 0, 4, 6, 13,800, and it will be 9,200. So 13,800 and 9,200. Okay. So is there any problem in this question? You can see the question and you can see the answer here. So is there any problem? Is there any doubt?
No doubt, sir.
No doubt.
No doubts.
Okay. So
Sir,
everyone.
wait. You will write.
Okay. Okay.
Sir, this 23,000 you calculated partners.
Yes.
Sir, you calculated in the old ratio.
Yes. That is 3:2, I think. Yes, 3:2. Revolution profit is distributed between old partners in their old ratio. Have you written this?
Yes, sir. Yes, sir.
Okay. So there is one more item in the question that is written here, that he paid 50,000 as his capital, but no amount was brought towards goodwill, which was valued at 40,000 for the firm. So can anyone tell me that what will be the journal entry and what will be the accounting treatment for this? Because new partner is bringing his capital, but he is not bringing his share of goodwill. So what we will do?
Sir, cash account debit to new partner capital account.
Yes, first entry is good.
Sir, old
But
partners capital account. Bill account.
cash account debit to C capital account. $50,000 and 50,000. Yes. And if he has brought goodwill, then we have to write here 2 premium for goodwill, and the total of these two will be written here. Is that clear?
Yes, sir.
Yes.
But he did not bring his goodwill. So what we will do, that we will calculate his share of goodwill, and C share in goodwill will be he is getting 1/5 share in profit, and the goodwill is, I calculate this here. Oh, actually, there is no option to do this. Okay, so the firm goodwill is 40,000 and his share is 1/5. So the share of goodwill will be 8,000. Is this clear?
Yes, sir.
Now he has to bring the 8,000 as his goodwill, but he did not bring the goodwill part. That's why the old partner will deduct the goodwill from his capital. To A capital and to B capital. Okay, can you tell me that new partner bring capital for which purpose and bring goodwill for which purpose? What is the purpose of bringing capital and goodwill?
Sir, to compensate the losses.
Okay, new partner brings his capital for share in assets and liabilities, and new partner bring the goodwill for sharing profit. Okay, so these two are for different purpose. Capital is for share in assets and liabilities, and goodwill is for share in profit. That's why C has to bring goodwill for getting share in profit, that is 1/5 share. Okay, so he has to bring goodwill, and if he has not brought the goodwill, then we will deduct it from his capital. So 8,000 will be deducted from C capital and it will be transferred to A and B in equal ratio. And why it is distributed in equal ratio? Can anyone tell me? Why goodwill of C is distributed between old partners in equal ratio?
Sir, because there is no profit sharing ratio.
No, profit sharing ratio is given in quotient, that is 3:2. Anyone remember this concept? Actually, the goodwill brought by new partner is distributed between old partners in sacrificing ratio. Not old ratio, it is distributed in sacrificing ratio. And you can see that here it is written, he acquired 1/5 share in the profit equally from both partners. So both partner is giving, is sacrificing his share in equal ratio. That's why goodwill is distributed between old partners in sacrificing ratio, that is equal. Is that clear?
Yes, sir, it's clear now.
Abhin?
Yes, sir.
Hiva? Ayan?
Yes, sir.
Good. So we have distributed the goodwill in this ratio, because I told you that goodwill is brought by new partner for sharing profit, and he is getting his share in profit from which partner? A and B. And if only A is giving his share and B is not giving anything to C, then the 8,000 will be paid only to A, not B. Okay, because B is not giving anything to C and only A is giving, A is sacrificing his share to C. Okay, so Always goodwill is distributed between sacrificing partners. So whoever the partner sacrificing his share for new partner will get the share in goodwill. Now there is no any other confusing part. We have to distribute this general reserve also, because at the time of reconstitution we have to distribute all the past profit given in the quotient, and we have to write off this goodwill. And can you tell me that in which ratio goodwill will be written off?
Sir, old ratio?
Yes, goodwill appearing in the books will be written off in old ratio between old partners. Okay, so it is related to past, and general reserve is also related to past. So this all will be distributed in partners in old ratio, and goodwill we have to write off. So it is debited to partners capital, and general reserve will be credited to partners capital. Okay, so there is no other any confusing part in this portion. So that's it. Do you have any doubt? You can ask your question. Any doubt you can ask from admission or partner or previous chapters.
Sir, provision for doubtful debts have to be reduced from debtors in the
Yes,
balance sheet.
yes. We have to deduct the provision for doubtful debts or provision for bad debts from debtors in the balance sheet.
Yes, sir. And also claim on WCR or IFR, like it'll be on the liabilities column, right? So the amount that is claimed only we have to write, or we have to write the entire amount.
No, we have to write the only claim amount in the liability side, because we have to pay only the claim amount, because workman compensation reserve is created for compensating the workers for their damage. Okay, so if any worker claim the damage, then we have to pay that liability, because workman compensation reserve is created. Okay, so we have to pay that liability. So only the liability part will be written on the liability side of balance sheet, and the balance will be transferred to capital account. If there is any deficiency in workman compensation reserve, then it will be transferred to revaluation account. Okay.
Yes, sir. Understood.
Sir, you wrote cash account that are to cease capital account. Yeah,
Yes.
that you cease paying 50,000. That's what you wrote.
Yes. C is bringing cash 50,000 in business for at the time of admission. So cash
Okay.
is coming. That's why cash is on the debit side, and C capital is increasing. That's why capital is on the credit side. Any other questions? Okay, so that's all for today. And next class, the sir will be available, so he will take your class. Thank you.
Thank you, sir.
Thank you, sir.
Thank you, sir. Bye bye.